S&P 500 hits another all-time high. And our guest today on Buy, Hold, Sell is actually saying now is the time to get in. You're not too late if you've been sitting on the sidelines. Welcome, everyone. I am your trader, Todd Schoenberger, and I am joined by my friend and co-host, Tobin Smith, out in sunny and chilly Scottsdale, Arizona. And we have a very special guest coming back to the show, Sylvia Jablonski. She is the CEO and CIO of Defiance ETFs. Sylvia, welcome to the program.
Thank you so much for having me. Great to be here again.
Absolutely.
Todd, you're supposed to say welcome back to the program.
Yes, yes, I know. Journalism 101, and I'll remember that, and we'll have a class later on. But Sylvia, I got to ask you, you've been on the news everywhere. You are the Wall Street aficionado with the finance media, and I could see why, because your ETFs are doing great. You see a lot of inflows that are going into the ETFs, but I also love the fact that you're bullish, that you are not afraid to say it. What do you think about this current market right now? Will we see higher highs in the S&P 500?
I am bullish, and if you look back, I mean, we're just really getting a little bit higher than we were 2 years ago, right? So it took us almost 2 years to get out of that bear market and back to those prior January highs, and now we finally trickled over them and surpassed them. So it feels like a lot of velocity in a short time, but really it's a little bit of a recovery too. So I think that this is the year of the soft landing. This is the year where jobs remain pretty good. People are still out there working, they have wages, they're spending money, consumer sentiment is sort of decent. The economy is holding up, and look, soft landing, and then a whole lot of momentum in new themes. So you have, the Mag 7. I think the Mag 7 is now basically AI and AI stocks. And I think that they're going to continue to grow here as that monetizes. Earnings are holding up, Netflix, the banks were pretty decent. Even some of the regional banks were pretty decent. And, I think as long as earnings season is what we expect it to be or better, and we don't have anything at, another war, let's not have a third war. Let's not have a major political upset or issue there, and let's not have Fed Chair Powell turning the other way. The rates are going down, inflation is steady. I'm a bull.
I like it. Toby, I mean,
soft landing in AI. This is the year of soft landing in AI.
AI. I got Toby. We have to get some t-shirts made up. I mean, what do you think? Because you've been out there, you're bullish right now, obviously. You've been bullish on this show. But what do you think for the audience? Because you still have $5 trillion sitting in money markets.
Well, and of course, that's the interesting point. Like a little esoteric thing today, market shoots up as it starts to trade because of Netflix, which, damn it, I was long those calls, but like not enough. I just did not. But you think about it, I go to Verizon and I get two new phones and two new iPads for nothing. Oh, and they throw in a Netflix subscription. Every adult I know over the age of 50 with children has taken back their Netflix password and says, listen, you shithead, you got to actually subscribe to this thing. And they got 13 million subscribers, of which 8 million of those, I guarantee you, are kids under 30 years old who've been stealing mom and dad's password. And then on the foreign stuff, you don't spend discretionary spending unless you have discretionary spending dollars. I've said it ad nauseum for a year and a half or 2 years. I don't know. It seems like 10 years we've been doing this, Todd. I can't remember. But we have in the United States the most structurally sound economy in the world because we have the most structurally sound technology in the world. We have the most unstructurally sound government in the world, but we have the ability to print our own money, so it doesn't really freaking matter. But that's another story. But I do think, Todd, it's not like we haven't been borrowing trillions for years. I mean, this is not a new thing. And after a while, people get used to it. They're worrying, oh my gosh, the bond vigilantes that could come in and ruin our. Well, and then Japan goes in and buys another $200 billion in 10-year bonds, and China goes in and buys $2 trillion. There's no other alternative. We used to say there was, Tina, no alternative to stocks, right? There's now no alternative in liquid bonds than in United States bonds. So unfortunately, I mean, if I live to 90, which basically based on my liver count probably is not going to happen, the whole the debt thing at some time is going to, but it's not affecting us now. And I love it when people get on those other television programs and they're, oh my gosh, our debt we're going to be out of business. And yeah, okay, it's 4.5% of our entire income. I pay more than 4.5% of my income on a mortgage and and life insurance and other things. It does. People get too jiggy, Todd. Why don't you understand? And the third thing I'd say just finally is that our AI, picks and shovels portfolio is now up. According, I'm just looking at it, up 48% this year. It's up 380% since April 15th of last year. Why is that? Because their cash flows and earnings. I'm up a stupid amount of money on IBM in the aftermarket here. IBM is AI OG. They've been AI before we even said AI. Right. So people who just are freaking pessimists, and maybe I've been hanging out with Dr. Ed for too long, but
well,
the people who are pessimists here are just dead wrong. Mike Wilson, come on the show and apologize.
There you go. Well, Sylvia, I mean, I know AI, and Toby is right. I mean, it's the darling right now. I mean, Dan Ives was on our show saying in 2023 you had 1%, or S&P 500 companies were devoting 1% of their budgets to AI. Now it's up to 10% for 2024. But you're right there. One of your ETFs, I would imagine, is the most popular ETF that you have is your AI ETF. And you tell us, I mean, you have investors just loving this right now? They're probably lining up at the door to send you money.
Yeah, they are. And actually, I'm going to pick up on what Tobin just said. I love IBM too. And IBM was actually, I think like a pretty sleepy tech stock for a lot of people. It's not a stock that most people that I, interact with on a daily basis.
School, Sylvia. Okay.
Yeah, I mean, it's it's just that I had an aunt who worked for IBM for like 40 years, and I just remember her talking about her amazing pension and benefits and how great the company is and all that. And we were like, oh, well, what's IBM? But anyway, IBM, talking about our ETF. So we have a quantum ETF, and I'll talk a little bit about it, but it has names like IBM in there. Why is IBM in there? To your point, it's the OG. Like, they're the first company that started working on a quantum computer, IBM, right?
Yeah.
So
well, they have Watson.
Totally with you on that one.
Watson is the only integrated, without getting too technical here, if you're using IBM as your mainframe, you're using it for computing, whatever it is. On Watson now, you could go pay Accenture $25 million to come into your business and hook up all your data, or you can just go on freaking Watson and pay $1,500 a month, and now you have all your data here, and then you can ask the question, okay, who is the most heavily paid person in the organization who is doing the least amount of work? Here's your list, right? You could be able to do all of that. So I'm totally with you. What is the ticker symbol on your quantum?
Yeah, so it's QTUM, and
that is original. I like that.
Yeah, we had this fun in 2018, and in 2018 when we were talking about it, people were like, "Oh, AI, like everybody thinks the robots are going to take over the world and whatever," but that's not AI. So I think that last year AI was sort of the brand, the theme, the creativity, the cool demos by Google and Microsoft and things like that about ChatGPT, the different bots and things like that, but when we thought about this in 2018, we thought, AI is many things, right? One, it's digitalization of factories. Look what happened during COVID and then not being able to find workers, right? So you need AI for that. It's about medicine and, parsing research and parsing data. So, in order for AI to work, you need supercomputers. You need things like programs like Watson that can, parse the data. You need companies like IonQ that work off of Amazon's Bracket, where you can use supercomputing functions. IBM already works with Cleveland Clinic on different drug trials that they're doing with this stuff. There's graphic elements. There's in that fund we have NVIDIA, AMD, Taiwan Semiconductors, all of the top chip companies that you can think of. And, ones that you've probably never even heard of are in there that, just got picked up by Taiwan Semiconductor in terms of orders and stuff like that. So you're getting the chips, you're getting the big computer companies, speed graphics, the 5G stuff, we think that when you think about thematic investing, it's actually like, it kind of got a bad rap at some point for being like meme stocks, but thematic investing is something that actually makes a lot of sense in AI, because you have, the ballasts, or like the Microsofts, the IBMs, they have good balance sheets, they're always going to be just fine, and, not arguably not that big of a risk to hold those names forever, right? But then you have like the small cap names in there that a lot of people haven't heard of, that are riskier, but then they might get M&A deals, they might find the new chip and whatever. So we have this blended portfolio of 71 stocks, equal
71.
And 71, yeah. And if you look at that, probably half of them are names like NVIDIA and
Sure.
kind of HP and names that and then there are other ones that you may not have heard of. And it's it's been doing great. I mean, year over year up 30%. Year to date up 6 or 7%. It's definitely over 200 million in assets, and I think people just figured out that it existed in the world last year, and it's just taken off since then. And that's our AI trade.
So you can take a micro cap like Quantum, and you can take a macro cap like Microsoft. In other words, you have the full gamut.
Yeah. Yep.
And are
exactly.
they market cap weighted, or is there a weighting that you use inside that?
Yeah, so they're actually equal weighted, and then they run and they have a semi-annual rebalance.
So correct me if I'm wrong or I'm confused. If you have $1 million of Microsoft, that means you have $1 million of Quantum?
Yes, but they run,
really?
because they run semi, like if you look at them, if you look at the names there, and I'll just name some of the top ones in there, the percentage, just to get the point. But biggest holding is AMD. There's almost 4 million. Number 2 is Marvell, NVIDIA. And then there's like Coherent, Teradyne, NTT Data, Onto. They all have 3 million. Those are some of the top, the names in the top 10. So
are you limited? Is there a rule that you have as far as how much you can have in one of those individual equities inside the ETF?
No, so it'll be just the 71 names equal weighted, and it'll just be rebalanced on a semi-annual basis. So, it kind of like run up to the 6-month mark, basically.
Can you veto the rebalance? Say one of your winners is just spectacular. Do you just let it ride?
No, it would be great to do that. But I think what people like is when we keep our hands off of things. We have some ETFs that we actively manage, and they're kind of the enhanced income option stuff. But for ETFs like this, where people really just want exposure to a theme, and they don't want us to necessarily cherry pick or change things up. Most of our investors like the fact that we don't touch it; it rebalances. That being said, we've had ETFs before where we were like we had a 5G ETF where we changed the index methodology to make it more superior, because it was capturing a lot of the mobile companies that just aren't doing anything kind of like fast enough with 5G, and they had too high of a weighting versus like the semiconductor companies and the companies that are working with AI, and how 5G integrates with those companies. And so we definitely improve funds if we need to, but that's something that like we inform shareholders about. And so yeah, we don't actively manage it. It would be great if we could do that, right? But
Todd,
when that happens,
I'm going to send her the Transformity AI picks and shovels portfolio and show her how 22 stocks can be up 48% this year so far. Now, but we let them run. In other words, to me, it would be a tragedy to cut AMD. That on every metric of valuation and growth and profitability and so on and so forth, and then cut it just simply because it arbitrarily got over a valuation point, because that's sort of like just shooting your winners and keeping your losers, isn't it?
Yeah, I mean, I think, if you have a market cap strategy and you kind of do it that way, then those names are, always going to be at the top. But it's also just part of the index rules that we live in the ETF world. So, if you come out and say you have an equal weight index that's capturing all of the AI, quantum computing, supercomputing theme, you have to rebalance it semi-annually, basically. And that's, and there are times when it actually has outperformed those names and tech and things like that, so it depends on
Okay.
It kind of depends on the time frame, but I get, I get your point. Right now, Nvidia's running, right? So you'd be perfectly fine if, like there are EV ETFs where like Nvidia is the biggest holding and they're doing way better than Tesla, right?
You're right. But you
But
do it
yeah,
every 6 months, so you could, in theory, have
you
Nvidia
get a
run
good
6
run.
months. Yeah.
Yeah, you get a good run for 6 months. But then, to kind of don't forget, in 6 months, you're also picking up maybe that number 70 name that, like has an M&A deal or something like that and gets like a 100% return in a couple of months. You get some of that too. And there's trade-offs, I think, in having that. But
all right, I'm going to send you one company. I'm going to send you one company tomorrow that on an AI basis that we're big on, and I'm also a 2% shareholder. Okay, but we're just in. I have my Canadian mountain skiing shirt on because I'm going helicopter skiing with the CEO this weekend, and you know why? Because the stock's done ridiculously well. So I said, okay, great. Let's go up to Calgary and do some skiing. But they have artificial general intelligence. They have the first software program that allows you to essentially have the machines think. And they were at Davos last week, and the stock did pretty well. So I'm saying, sorry, Todd, keep going.
No, that's okay. That's okay. But let's
I get excited. I get so excited on IBM.
Yes. There's so much to be excited about when it comes to IBM. That's for sure. So listen, let's leave it there on this block, because coming up in the next segment, I'm going to ask Sylvia. I really want to just a couple of other follow-up questions on the quantum ETF, but we also want to talk about the new launch. She actually has Defiance has a new ETF coming out tomorrow. We have to ask all about it because it's very exciting. And we also want to talk a little bit about the current earnings season. So please stick with us.
That defies logic, doesn't it? Oh, that's right. Defiance. Sorry. Okay.
There you go. With us today, we have Sylvia Jablonski, the CEO and CIO of Defiance ETFs, and we'll be right back on Buy, Hold, Sell right after the break.
Buy, Hold, Sell, brought to you by CrossCheck Management.
Ready to up your game and learn more about the thrilling world of sports betting? Introducing Double Down with Breslow, the ultimate podcast about the business of sports gambling. Join me, James Breslow, and a long list of expert guests as we dive into the art and science of the sports betting industry. Evolving regulations, technology enhancements, and the meteoric rise in the number of players makes this sector the fastest growing and most intriguing in the world. Unlock the business secrets from many of the industry's most recognizable C-suite executives, including famous odds makers and influencers. Every episode of Double Down with Breslow is packed with insider tips, deeply skilled analysis, and in-depth discussions. Don't miss out on the ultimate resource for mastering the business of sports betting. Listen to Double Down with Breslow on the Evergreen Podcast Network or wherever you listen to podcasts. That's Double Down with Breslow, the business of sports betting podcast.
Well, the S&P 500 hits another all-time high, and we are in the middle of earnings season with Tesla coming out after the bell, as well as IBM. And Tesla definitely disappointed. I will say that's going to definitely have an impact on the markets tomorrow. But with us today, we have Sylvia Jablonski. She is the CEO and CIO of Defiance ETFs. And in the last block, Sylvia, you were telling us all about the quantum ETF. It is just one more follow-up question with that, because I would imagine that since it's cap weighted, you're there even Steven all along. You probably have one eye on earnings, but you're probably not really caring about the earnings, right? Or am I missing something because we're right in the middle of tech earnings season?
Yeah, I mean, in terms of caring about earnings for each of the individual names, you're right. It kind of doesn't matter, right? Because there's 70 names in there, it's equal weighted. But I do very much care about earnings because I think that anything positive that is said about AI, supercomputing, we're talking about IBM, Watson, quantum computing, data parsing, that is very, very good for this ETF. So I do care. The more that companies are spending on AI, implementing AI, talking about using AI, whether it's healthcare, kind of whatever sector, pick one, it's really good for this ETF.
So with that though, since we are, you got one eye on tech, obviously. What do you think, though, if you're an investor, just your casual investor right now, and you're seeing these headline stories come out? you're bullish on the markets. I'd assume you're bullish on corporate earnings as well. Does this continue though for the rest of the year?
I do think it's going to continue. You know, it's a little bit, it kind of takes you back when you get so much of a good run up just a month in, although January is, usually a pretty good month. Last year ended up high. Next year's market tends to kind of do the same thing. We know that rates are eventually going to be cut this year, yada, yada, the same story sort of exists. So, I am bullish. And I think, I think Tobin opened up, or perhaps you opened up and said that there's, trillions of dollars of cash on the sidelines. Eventually you're not going to get 5% from your cash, and you're going to see these stocks that are ripping 10, 20, 30 to 40% off of, AI and off of tech. And that pumping back into the market, that can bring liquidity into the market. That can actually get us to continue to rally. Rates actually being cut, there's a psychological factor to that for sure. People are going to be so excited when we get that first rate cut, even though, it's perhaps because the economy is slowing. That's not how the market usually reads those things. So I do think that there's a lot of reason to have momentum. The biggest of which is, corporate earnings holding up, something to believe in, kind of this AI theme, and again, just, stable economics.
Yeah. So Todd, when we had the first big rush up in May, when NVIDIA brought, the blowout numbers, we had a lot of subscribers and money management clients that own that stuff because we're sort of ahead of the curve, right? But when SMCI went up $300 from a $125 cost basis, only an idiot would not at least take the cash out that they originally put in the damn thing. And so, when people, I get texts all the time, emails, et cetera, saying, have I missed AI? No, you haven't missed AI. It's about a 1.5-year-old, still stumbling around looking for the toilet. But as a stock buyer, we're basically getting sort of a melt up right now. And when you get a melt up, meaning that people who were short the stock had to buy stocks back, which then created no sellers, and you had more buyers here and sellers here, stock goes up until they get to equilibrium, right? But we'll get pullbacks here. The hardest thing to do for, I think, retail investors is to understand, hey man, this is a 5 to 10 year cycle. In 5 to 10 years, it won't matter, that you missed to 8% or whatever the melt up was today. But you have to look at buying these things back at the 50-day moving average when they, somebody in the industry craps out and so everybody gets taken down, or just simply there's a profit taking time. I won't even go into all the different groups of people that own things, but God bless the ETFs. So as long as people keep money in your ETFs, you're not selling anything. And essentially that's what the S&P 500 index funds have done to the stock market, is that as these market caps go up into the S&P 500, 5 of our companies went into the S&P 500 this year that weren't in them last year. Shockingly, all of those are AI stocks, okay? So they're climbing the stairs of valuation, which then gets the market cap crazy going. And Kathy Wood is right. Market cap S&P 500 indexes have changed the stock market. But in the ones that are not in these big indexes, that's where you have the advantage. And pull back to the 50-day, let them have some profit taking, and then build a position. It's just not all or nothing. And that's what drives me nuts on retail investors that are like, oh God, I missed it. So now I'm gonna chase it at the very top where it's at about an 85 relative strength. By the way, that's high. 70 is high. And then, it comes back and they're like,
yeah.
It's fair as a weather report. What's that line? Fair as a weather report in the stock market.
There you go. Yeah, I like that. Well, let's pivot away from this, though, because Toby did mention about the ETFs. And Sylvia, we got to talk about you. We talked last week offline when we were talking about the new offerings for Defiance. But tomorrow you have a very exciting product that's hitting the market. Tell the audience all about it.
Yeah, sure. So tomorrow we have an ETF called TRES, TRES, hitting the market. And last time that I was on with you guys, we talked about some of the different options products out there, the products that, essentially use put rate strategies to generate yield. And so we have one on NASDAQ, we have one on S&P 500, we have one on Russell. So we got the, S&P 500, we have tech, we have small caps. And We thought that, there's one area in the market where you don't really have a very juicy product that utilizes options to generate additional income on fixed income. So TRES is basically going to be an enhanced income product. It's going to be, long volatility on underlying ETFs. Think like TLT, for example. So you get a combination of income from the actual, fixed income products and funds that we use. Yeah, the underlying. And then on top of that, you get premium from the options that we're going to use on this. So it's going to be an actively managed strategy. It's going to be, kind of flexible, allows us to hedge on the downside, allows us to be, long vol, basically capture more upside. And it's going to have a combination of options and the underlying. And then we also launched an ETF a couple of weeks ago called High, which was the Israel bond ETF too. So that's
you mean
for us.
It's not a cannabis ETF? Come on, man.
No, you know what? We had one and nobody touched the thing for like over a year. We had a psychedelics ETF, and it was like half psychedelics and half cannabis. And everybody was writing us and telling us how much they loved it, and it just RIP.
Yeah,
but
they're not all winners. Hey, kiddo, what's your take on the concept out there, which looks like it's reality, that the one-day options, the selling of one-day options, has completely screwed up the VIX? Are you in that camp or not?
I mean, if you look at the data from the SIBO, it has done absolutely nothing. There's, I think I saw a report come out from SIBO, and on the largest day, kind of like the net exposure was less than $1 million worth of notional or something like that. So the buyers and sellers match out pretty well on these things. And, from the data that we see, there's almost no impact. So I think, we have to see data for this stuff, right? If you talk to, kind of the traders trading these things, they don't think that there's any, major impact. But then, it's almost like, it reminds me of working for the Levered Inverse ETF company, right? And every day I hear like, oh, you guys on the 3X products, right? Every day, like, you guys are moving the market every single day at the close. And like, it's just not true, right? Most of the orders would net out because you have creates, you have redeems, like nobody knows what goes on behind the scenes with ETFs, right? So it's a similar type of thing here.
So you're not a fan of these the ETFs that are selling one day options for income, basically?
Oh, I am a fan of them. I mean, we're doing it.
Oh, okay. I was going to say, I thought you were doing it.
No. We're a fan. I'm just saying, I don't think that we're disrupting anyone's, ecosystem while we're doing it.
So you weren't responsible for that 400-point crash 2 weeks ago when that they blamed on the DTE guys. Good for you. I would have stuck up for you, Sylvia. I would have stuck up.
Thank you.
The symbol on the new ETF is TRES.
Yes, TRES. It's supposed to, Treasury, TRES, and yeah. I mean, if you when we back tested it in order to create it, it looks like you're going to get like a steady 12 to 15% yield on it. Pretty low standard deviation. It should be a good complement, I think, to fixed income, and we needed that, right? Because all of our stuff is very much like AI tech.
Yeah.
NASDAQ put right, S&P put right, small caps put right. So we, people who come to us say, how do I diversify? How do I have something besides kind of all this equity exposure? And so, this is our take on creating a larger alternative income suite.
Cool. And well, in theory, go ahead, Todd. Go ahead.
Well, I was going to ask, are you ringing the bell at the NASDAQ or the NYSE tomorrow?
No, we're not. They have a very long list of IPOs.
Yes, sure.
We rang the bell for QQQY though, which was amazing. And I have to say that the exchanges are just like, they're so good to us. They put on such a great show. And anytime we bring an investor there, it's just like, it's like going to Disney World, right? And never gets old. I love going there. Like I love, people who work there are just like awesome. It's a lot of fun.
Sylvia, I don't have as quite a hard-hitting question as Todd asked, but when the Federal Reserve starts cutting rates, your bond portfolio, the underlying bonds go up in value. So how do you capture some of that increase in the underlying bond?
Yeah, I think, the reason we're launching this product is really because the options the options on these types of products, like TLT, for example, are just mispriced. And so there's just like a lot of great opportunity to capture income on the options. So we're not really so worried about, you know, the 5% or whatever. I mean, if it goes down to 2 or 3%, we don't really care that much, because the mispricing on the options is good enough where we're pretty confident. And that's why I said 12 to 15, right? So I think if we get down to 12 or 13 versus 15, 16, we're okay with that. We think it's
tell the audience
a steady
quickly
dividend.
Why the options in the bond market and TLT are so screwed up, because I don't know the answer to it, but I know how screwed up they are.
Yeah, I mean, to be honest, we've looked at this. Yeah, I have the same feeling as you. We sort of don't know why, but they're sort of grossly mispriced along the way. We don't know if it's just kind of like lack of interest, or if people don't use them the same way that, you know, we're going to. So I have an answer that's similar to yours. I don't know why, but it's there.
I plug it in. I plug it into, you know, to the formula that all, you know, financial analysts learned like the first year of school, right? And I plug it in. And the price that I could get if I sell the option is like twice what I should be getting based on the volatility.
Yeah, right. Yeah. And so, you know, and so that doesn't make sense, but you know, you can capitalize on that too, right? And that's what, you know, so that's what we're trying to do. And we wouldn't have launched it, to be honest, if we didn't see that. It doesn't look like there's a fund out there that really takes advantage of that just yet. Maybe I'm wrong, but we haven't seen one. I think we're gonna try to give that a go. So, you know,
it reminds me of the Bill Withers song, Todd.
Yeah.
If it feels this good being used, you can keep on using me.
There you go.
Use me up, right?
There you go.
I like it. Maintain the silly valuation on the call premiums. Here you go. I sell them every week on the TLT for our fixed income stuff. And it literally, usually the market takes care of these discrepancies. You know, that's sort of like the whole idea of having a free market.
It does. That's absolutely right. Usually these things get arbed out pretty quickly. And, you know,
no doubt.
They're
no doubt about that. Well, listen, we're going to leave it there for the show, because we're glad to have you back, Sylvia. Definitely want to talk about how TRES is doing, as well as the other ETFs. I can't wait for the launch. I know investors are waiting or can't wait as well. So
sure, listen, you're the first to hear it, by the way, because
it's an exclusive.
First to hear it. 4 p.m. Post 4 p.m. I can talk about it. So you.
All right,
it's another buy, hold, sell exclusive. I love it.
That's
the
right.
audience is gonna love it. We're going to
tell Todd to be quiet
this
now.
Like you wouldn't believe.
Tell Todd to be quiet now.
This is
tell
great.
the listeners what is the ticker or the URL that they can go to your site?
Yes, DefianceETFs.com. DefianceETFs.com. Right?
I'd much rather hear it from her than you, Todd. For you, it sounds like some Baltimore guy screaming into a microphone. Whereas she could also say it in Polish too, by the way, which I think is fantastic.
That's right. Well, Sylvia, thank you so much for joining us and giving us an exclusive on Buy, Hold, Sell. We can't wait to have you back, and you're a wonderful guest as always.
Thank you so much. Thanks for having me.
and on behalf of Sylvia Jablonski and Tobin Smith, I am Todd Schoenberger. Thank you once again for joining us on Buy, Hold, Sell. We'll catch you next time.
That's all I know.
Nostrovia.
Take care.
Buy, Hold, Sell, brought to you by CrossCheck Management.
If you like Buy, Hold, Sell Live, be sure to smash the like button.